today is also about market psychology. Okay. So the disclaimer first, guys, as usual, remember that everything in this video is educational in nature. Okay, nothing should be construed as investment or trading advice. You guys trade, please do your own diligence before you guys trade. Okay. So introducing your host today, my name is Peggy. I'm an investment analyst and a prop trader as well. All right. Okay, so what I'm going to cover today, which is understanding market psychology, common psychological bias in trading, mastering market psychology for success. Okay. Okay, just give me a minute. I just want to monitor the question because we do stream two channel, one in app, another one in Zoom. Okay. Okay. Just me. Okay. So let's just begin the past one, understanding market psychologies. Okay. So market psychologies refer to the collective emotion and sentiment driving the market behavior. Okay. The psychology factoring influencing individual and group decision. Okay. So ultimately shaping the market trend and asset in prices. Okay, and the role of emotion in trading, emotion such as fear, greed, hope, and regret play a significant role in driving markets participant, okay, behavior. We will explore how those emotion impact trading decision and investment outcome, and how emotion bias can lead to irrational decision making. And the last one is behavior finance conception. This section, we will introduce the key concepts from behavioral finance, such as prospectively mental accounting and the framing effect. And we will discuss how those concepts shape investor behavior and market dynamic. Okay, so I think market psychology to me is similar to trading psychology. Okay, let me show you something. All right, just give me a minute. Okay, of June. Okay. Okay. Maybe let's just move on to the past two common psychological bias in trading first. Oh, okay. So the past two, which I'm going to talk about, right? Confirmation bias lead the trader to seek information that confirm their existing belief. Okay, it can leading to bias judgment. We will provide example and discuss how confirmation bias influence decision making in trading. Okay, for example, maybe I just move another. Where is why I cannot use the pen? Oh, okay. Sorry. Let's just go to past two. Okay. All right. So there will be emotion. Okay. Where am I? Okay. Talking about the overconfidence. Okay, overconfident in trading. Um, my apologies, guys. There may be some error in the slide here. Let me just adjust. Okay. Okay, so apologies, just skip that slide. All right. Okay, I just want to talk about the maybe part 3 before I go to the part 2. I think part 2 will be another slide. Okay. My apologies. Okay, so we talked about mastering the market psychology for success. Okay, first, what you need to know, you need to have awareness, which is recognize bias exist and understand their impact on decision making, acknowledging bias around you to mitigate their effect. Okay, and education that you need to know, you need to have the knowledge if you want to mastering market psychology. Okay, basically you need to learn about the common biases in trading to recognize them in your behavior, understanding underlying principle help in decision making, and you have to keep your trading journaling as well. So basically maintain a trading journal to track thought, emotion, decision, and revealing past trade reward pattern influenced by self-awareness. So basically if you want to trade, okay, you need to have your own training journey. Okay, you need to have a knowledge. Okay, just want to keep it simple, and you need to have a risk management as well. Okay, so basically if you have management, okay, just have to implement the risk management strategy, which is you need to know where you're going to play stop loss, where you're going to play the take profit, and you cannot like over trade. So basically, okay. Um, okay. Just ignore all the spam. Okay. I saw all in app. Just ignore that. Okay. And the next one, like I mentioned, continuous learning. So basically, commit to continue learning and self improvement. Stay updated on development in behavior finance and psychology to enhance understanding of market psychology. So basically, a lot of people say, just want to share with you guys that, like, you know, if you want to like master market psychology, or you want to like survive in forex market, you should not learn like so many training psychology, because you know there might be like conflict to each other. But maybe based on my experience, I personally think that you should know many strategy. Okay, because the market condition is always different. For example, if you do the back testing, okay, which is you use the old data that could be like 1 years ago or 2 years ago, the market condition is different. So let's say if you test the strategy, let's just say maybe lot like demand and supply, okay, use all the old data to 1 year to 2 years ago, that strategy is may not be your current market situation, right? For example, if you look at the chart, okay, for example, and then you implement either like maybe one strategy because you want to master only one strategy, which is that is okay. For example, you just learn only one strategy, for example, maybe harmonic pattern, okay, because you think that okay, I shouldn't, you know, study or learn many strategy because there is so many strategy out there. I think I just want to focus one. I agree with you on that. But for example, you only know how to trade maybe harmonic pattern, for example. For the harmonic pattern, okay, what we see, maybe you spot harmonic pattern on the EURUSD in H4 time frame. Okay. Oh, okay. Okay, for example, you only know how to trade by using harmonic pattern. Okay, then you mark out, okay, this is your harmonic pattern. Okay, up to here, and then you know that okay, up to here is already finished the D leg. For example, if you know harmonic pattern, we will wait for price to complete the D leg, and then we're going to short from this level for the reversal. Okay, for the harmonic pattern, for example here, and you know that okay, this your somewhere around here. It's your line up with your resistance level, for example. Okay, and then you will short from this level, right? This harmonic pattern. What if like after that you, for example here you spot harmonic pattern, And the rest of the maybe the rest of the like another day or whatsoever, you did not see any harmony pattern, and then you wait. Okay, you wait, meaning that if you know many minute strategy, maybe like today you spot a harmonic pattern, and then later that maybe tomorrow or in the afternoon or in the morning you don't see harmonic pattern, but you know that okay, you know another strategy, which is, you know, for example, this could be your another pattern, which is this not harmonic, right? But you know that okay, I look at market structures, I know that price on uptrend. Okay, okay, you know price on uptrend, you know how to look at market structure. Price is make a higher high, and then they cannot make a higher high, for example. You know that okay, I understand the market. Okay, you know that okay, price is like make a equal high, for example. And then from here, you know that price cannot make a higher high, they make a low high, and then they kind of like form like kind of M pattern here. So if price break this trend line, which is your uptrend, we kind of like want to wait for price to pull back, right? From the neckline here, and then you're gonna short here. Okay, and then you know how to trade by using Fibonacci, because you know that I learned Fibonacci. You say that okay, I know how to trade using Fibonacci as well, and then you know that okay, here would be like 50%. Okay, just give you an example, and then you can see that price come, but it may not hit your neckline, but it's your resistance level from this body and to this week, right? You highlight the zone, for example, and then you might get the entry here. Okay, the wick here, and then you make it entry, right? Falling. Okay, here, falling here. For example, right? You learn mini strategy, and then you also learn how to trade with price action. Let's say you want to short here, price go slightly above, but it hit for, okay, there will the price or the market will tell you that, or the candle, they will tell you that okay, I'm going to revert from this level. Okay, this is your price action, right? This form of your price action. Even though let's say you have a selling order here, price slightly go above here, which is I think they trigger somewhere, not even there, maybe here, not even there, but you know that your price action. Okay, let's say you have a floating loss, price go up here, and then you can see, oh, the market is on your side, because you see that this is a side of reversal pattern, your price action here, and then you hold your trade, and eventually it might hit your stop loss. Sorry, it might hit your TP. Basically, this is gonna be your take profit. I will put my profit at the body of the candle. Okay, and then you might see it might hit your TP. Okay, just slightly you see almost hit your TP, and then it revert, but you hold the trade, right? Because you know that this is price is changing, making the equal high or M pattern, pull back your price action here, and then you hold your trade. So what I mean by that, in order for us to stay survive in forex market, it's good for you that you learn mini strategy. Okay, don't give up. And another one is, let's say you interested certain strategy. For example, you want to learn SMC, right? For example, I say that okay, I trade by using the SMC strategy, for example. And then you say that okay, you want to learn SMC, all right? And then you learn SMC for maybe 1 week, and then maybe another friend or another trader group that you were joining, they say that okay, they earn a profit by using ICT, and then you give up SMC, and then you go and learn ICT for maybe 2 weeks, and then after 2 weeks, and then other people say that they just easy money if you know how to trade by using Fibonacci retracement or Fibonacci extension plus Fibonacci extension. And then after that, you just give up ICT, and then you want to learn Fibonacci extension, because people say that easy to trade by using Fibonacci and Fibonacci extension together. By what I mean is that if you want to do like that, end up you won't learn anything. Okay, you should master the SMC first. Okay, after that you want to learn, then after that you go and master ICT, and then after that you go and master Fibonacci extension. From Fibonacci extension, if you know how to use it, you can just use Fibonacci retracement and extension for harmonic pattern because they are using Fibonacci level, and you also can use Fibonacci for Elliott wave as well. So by mean that just master the any strategy that you're interested. Don't study only like 2 week, 1 month, and then you think it's not gonna work, and then you look for another strategy. Because end up, if you learn many strategy, you will know that those SMC, for example, okay, they try to follow the market, right? They want to understand the market. Basically, if you know how to look at, for example, SMC, right? The SMC here, for example, we know that one price break the low. Maybe not a good example. Maybe I try to catch. Okay, for example here, we will look at EURUSD. Okay, this may not look good, but what we can see here, price starting to make a higher high. You know that you understand the market psychology. You know that the market is on uptrend, right? Maybe up to here and all the way here. Okay, you want to look at market structures. You know that it seems like they break the low here, even up to here, but could up to here. Just for example, okay, for SMC, you master SMC already. You know that the SMC, they call this one is chain of character, right, or chalk for the short form. For ICT trading strategy, okay, they call this one, which is MSS, which is stand for market structure shift. Here actually it's the same meaning. Okay, even though if you trade by using another strategy, which is QM or Quasimodo trading strategy, okay, which is price make a higher low, higher low here, okay, or head and shoulder, okay. Let's just say head and shoulder. Here it could be, so you mark out, for example, you know those strategy. This should be your left shoulder, right, and your head, okay. For SMC, ICT, definitely price break below the low, right? You can put this SMC, they call shock. ICT, they call market strategy. Okay, so we're going to sell. We're waiting to sell here. Let's say you know how to trade. Okay, you know that, okay, market already changing from uptrend. They break the low, right? Because if they want to continue to make a uptrend, they're supposed to go like that, higher high, higher low, but they make a new low for you here. So for the either head and shoulder or Cosimo training strategy, we have to wait for price to pull somewhere around here, and then you short. This for head and shoulder. They create what? Here they will create the right shoulder, right? For example, just want to show you if you know many strategy. And then for SMC, if you want to short here, the SMC here, they will have what? There should be either fair value gap here, okay, or they could have Fibonacci retracement for optimal trade entry. For the ICT, they will wait to short here. 78.6 and 61.8, they will label out at OTE, which is optimal trade entry, or fair value gap here, or if you only trade resistance level, this one could be line up with your resistance level. So by means that it's good that if you know many strategy, because market condition is always different. Okay, every day is different. Okay, not the same. It's the same like you were to look at dollar index. We know that dollar index has negative correlation with USD, GBP and gold, right? But yesterday or a few weeks ago, gold and dollar index, they have positive correlation, which is yesterday there's a new came out, right? Is negative for dollar index. Dollar index should be negative, it will be falling, but then you can see that gold also falling. So they have a positive correlation with gold and dollar index like currently, which is they used to have like negative correlation. So now they are positive correlation for the current market. So it's good that you know how to trade with those like correlation or no, or other strategies. Okay. All right. Okay. Talking about risk management. Okay, I just want to talk about risk management. If you are a scalper, okay, if you are a scalper, risk management, you cannot have like risk and reward. You get what I mean? Because the scalping, okay, they you only can measure is a win rate. Okay, you only can have like win rate. For example, you are a scalper. Okay, you're a scalper. Sorry, scalper. The win uh, the win rate should be at least 80 to 85% win rate for scalping. Okay, because if you are scalp gold, right? Usually for a scalper, they only want to like scalp gold at least 15 to 20 pip, and then they exit the trade. Okay, like they in and out per day like many times when you see like that opportunity. Okay, but if you are day trader or you are swing trader, okay, your risk and reward should be at least 1 to 1, right? Risk, risk and the reward. Where's my risk and reward? Risk and reward. I just put have to be at least 1 to 1. Okay. For example, maybe we are day trade. Okay. For example, gold, right? You want to look at gold here. You know that you're gonna short from this level. Okay, here. Because we look at the market structure, you know that okay, prior to be here even uptrend here on uptrend, and then price break or the support level here used to be support level, now it become your resistance. And we did not wait for price to go to the resistance level, but you see here this is your supply zone, right? Dot break dot. For example, your risk management, you put your short entry right here. Okay, you put your short entry right here. The risk and reward here should be like at least 1 to 1. Okay, even though like maybe you put like just slightly above this another supply zone here, you see here risk and reward, at least we will target at this the body of the candle here. Risk and reward is more than 1 to 1. This one is like 1 to 3. Okay, so if you are the trader or you're swing trader, at least have to be 1 to 1. But if you're a scalper, okay, the strategy that you trade at least must have at least win rate 80 to 85%, even like 90%. That is the best. Okay, for scalping. Okay. There's so many spam, so just forget about that. Okay, and go back to the slide. Um, any question here? Okay, there is no. I'll pause here for a while if any one of you guys have any question. Okay, maybe don't have, just move on. So market psychology can manifest in various form, including like this one I just mentioned. Okay, this in like part 2, the definition of market psychology refer to emotional, okay, or behavior factor driving individual and group to buying or selling decision in the finance market. What does that mean? For example, okay, you want to look at the chart. Okay, either we look at gold, for example, and then let's say we wait to, for example here, Okay, or maybe it's not. Maybe up to here. For example, here, okay, and then we mark out, okay, we are trader, right, or the retail trader, we mark out that, okay, this is maybe here slightly up to this week, right? You mark out this your support level, okay, like we mark out the support level because price come a few times, right? You look at the week in H4, price come here. When price come here, the retail trader, there are rejection, meaning that we want to buy up. Price came down, we buy up. Price came down, we buy up. Like, you know, fourth time. Eventually, this are slightly and then bounce up. So a lot of people say that, okay, for this used to be the resistance level, it becomes your support, right? Even a lot of the trader here put the wick here. Okay, I put here at the wick. Used to be the high, the all-time high. It used to be all-time high, right? You look at here, okay, here, okay. If you trade resistance, okay, price break the resistance, pull back, it's become your support, right? Which is what you can see here in head 4. Okay, people who trade resistance level, price break above, break at this candle, right? Now they pull back here, then you buy up. So there is a lot of the trader, they will buy from this level, which is at 24.31. They will buy at this level because this one used to be resistant. Now break above, so it pull back, it's become your support level, right? You buy up here and then you don't know where the price is going to stop, right? A lot of people may not dare to buy this at this level because they think that, okay, these are too expensive already. But they also have a bunch of the trader, they will buy at the pullback support right here. And then eventually price break below here, okay, with this candle, even come all the way to this second support, and then it bounce up from this support, it become your resistance level. So there will be, then a lot of people say, okay, since price cannot break above this one, then they will buy at sell. That's why we always sell here. You can see the price action. Okay, price close below the 24.31. Okay, then you short, and then you buy up, and then you short again. Then eventually, some of you, if you still want to buy up from this level, you might get stop out. Okay, a lot of people also waiting to buy at this level. This could be your another, for example, like second support. Okay, and then you can see that, and you can see that price break below the first support, break below your second support, meaning that a lot of people here will get stopped out, right? Stop out because only the big boy in the market can move the market, right? You see that a lot of people here will have, you know, buy either pending buy order here, and then eventually even here you will get stop out because we will wait for price to break above, pull back, it becomes a support, and now they break below, and then you need to mark out again. This could be your resistance level if you trade by support and resistance. Okay, and then a lot of people will wait to buy at this support, right? Because this could be like overlap support. It's very nice, but what you see that, okay, you will get stop out again, even though at this candle in head 4 price came all the way down. Okay, then the retail trader will just buy up, okay, and then continue to sell because I think those like big boy in the market already, you know, want to make the money, right? Because they buy. Okay, if you were to read the market, even the candle, if you were to read here in head 4, those like very small candle here is the retail trader here, like, you know, this on like the retail trader. If you see the big candle here, you know that there is a big boy in the market. So try not to against them. If you know that, okay, price come from this level, price break here, we'll buy at sale. Okay, we'll buy at sale only. Okay, like you have to look at H1, or sorry, daily time frame. this is very clearly that they're going to like they're going to like reward from this level. Why? If you know how to trade, okay, we read the market, we know that okay, price make bearish engulfing candle, which is they already form you that they're going to reward from this level. Okay, if you want to mark out this week, okay, this one used to be all-time high, right? This one, and then you can see that eventually in daily time frame, the week price close below this level, which is 2431. Okay, and then you know that oh, they cannot make a higher high. Okay, they close below, and then you need to buy and sell. Okay, for gold in the daily time frame, you target at least this is a neckline, which is we might see that they might want to create the M pattern. But if they break below 2284, pull back and then continue to short. So this is like, a lot of the trader, if they read like that, we want to like short from this level. Okay, continue. Okay, so emotion. Okay, emotion react for the market. This time we refer the behavior already mentioned. Driving by emotion reflect to the market event like data release, which is new. For example, like last night. Okay, a lot of the trader they trade news. I used to do that, but not anymore. For example, we go to the I only look at the forex factory. Okay, for example, the forex factory here yesterday. Okay, this is the new for yesterday is what? Yesterday is or Tuesday. Okay, I forgot. Okay, yesterday there's a new came out which is they are negative for dollar. So we basically dollar will be falling. Okay, a lot of the trader they will buy gold because they think that okay, gold is negative correlation with dollar index, right? Okay, so I will show you here. If you trade new, I will maybe I go to dollar index here first. I remove and then I want to check the correlation with the okay here. What you can see here. Yesterday, maybe I change this one to the candle so you guys can see. Okay, this is gold. Okay, and this is dollar index. Like yesterday, maybe I go to H4. Okay, yesterday, why I cannot move it up? Mm, okay, maybe here, just maybe here. You guys can see, right? Okay, for yesterday, the new came out, which is should be around around this one. Maybe I just remove first, and then I might do like this one. Oh no no no. Just use maybe price. Where is that? Okay, now I remove. Okay, for example, okay, yesterday I look for maybe M15. Okay, I try to look for you and then mark out yesterday. Where is it? Tuesday, new release at 10, right? Okay, this one I just changed to my time zone, okay? So just in case you guys don't know, we base in Singapore, so I will just change the time zone over here. Okay, you can change your own time zone wherever you live, all right? Okay, 10 p.m. Singapore time, GMT plus 8, okay? Maybe, no, may. Let's just have somewhere around here. Okay, here. Yesterday, Tuesday, should be here. Okay, around here. You can see here M15. Okay, you can see here. Okay, like price falling, maybe M5. Okay, here. Okay, you can see that because the news came out, it's a negative for dollar index, right? Price falling and then eventually it's rising. You also can look at gold, which is yesterday, Tuesday, around here, around this candle. You can see that a lot of people they are selling gold, but what you notice that they have negative correlation with dollar index, right? So your trade news, I think you have to be very careful, but I don't trade during the news event anymore. Okay, and another one is that like maybe you have an emotion state, which is you may have fear or you have a greed. Fear meaning that, for example, you have the own trade setup. Okay, you have your own trade setup, and then you know that okay, one price approach to your level, for example, and I recommended you to not follow other like a signal group because it might make you confused. For example, you have a fear. You know that okay, I learned that I want to short at this level. Okay, I want to short here. But then maybe you are listening or you follow other like signal group. They say that okay, they want to buy at this level, and then you fear already. You have a fear. You dare not to trade. You dare not to like follow your own trade setup because you yourself say that I want to short when price come to this level, but other group they say that buy at this level, for example. Okay, then you will have emotion already. Then you did not buy. Let's say you don't trust yourself, you don't short here, but you buy up, and then you can see that your price falling, and after that you will like blame yourself that I should trust myself. I should not like listen to others, but please trust yourself and trust your own setup. And what about the greed? Meaning that let's say you have set a plan, you want to be disciplined. You set a target today, I want to earn like let's say maybe $100, or you want to earn 1,000, for example. And then maybe early morning or at the Euro market, you already hit your target, which is either $100 or $1,000. You already hit. Okay, and then you very confident, you say okay, I want to earn more. Okay, so you entering the market again during New York open. Okay, New York open, for example, you already earn 1,000. Maybe the day is not your day. Okay, maybe let's say you lose 500 during the New York market, and you might tell yourself, okay, I lose 500, I still have 500 to go, for example. Then after that, maybe you trade during news event. Okay, then eventually you lose 1,000 or $100 profit, and you may or may not lose your capital as well. So don't be greedy. Okay, set the target, be the discipline. Okay, don't hope. What about hope, for example? Okay, for example, hope, I used to do that, okay, but not anymore. For example, I set my stop loss here, for example. Just example, maybe I like put my stop loss here. For example, I set my stop loss here, and I short go. Okay, I short go only here. This is my sell entry, and then you can see the price is rising. Okay, price is rising. Okay, price rising, and then from here you see, oh, price rising, and then you hope, okay, then you remove your stop loss. You keep moving your stop loss, for example, and you hope that certain level or here is my reward, it won't hit your stop loss, right? For example, you keep moving, and then because you're hoping, then eventually if you hit your stop loss, okay, is it your stop loss? Instead of, let's say, if you just stick to your stop loss here. You, for example, you might just lose, for example, like $100. But if you keep moving and hoping that price will reverse, like like, or before hitting your stop loss from 100, it could become 200 or even like 1000 if you keep moving. So don't hope, just set your stop loss, TP, and then ready to run. Okay, that's what I mean. And the regret, what I mean by regret, when you trade, for example, when you do a trading, when you do a trade setup, for example, this is a good for example. Okay, you set your stop loss here. Okay, you put your stop loss over here, and then you sell go here. Okay, and you set your TP over here. Okay, and price go all the way and trigger your stop loss and then revert and hit your TP, which is this week. Okay, and then if you feel regret, if you feel that you blame yourself, okay, then you won't survive in this market, because if price really hit your stop loss, okay, you tell yourself that it's okay, you're learning something today, right? Maybe market is not on your side. Okay, maybe you did not find the key level properly, because if you to look at H1, this could be your sell entry, right? And then you put your stop loss, at least you put your stop loss exact at the resistance level. You can see that one is trigger your stop loss and then falling, because this is your resistance level, right? So one is hit stop loss and then price all the way to hit your TP. Okay, don't regret, don't blame yourself. Okay, just lesson learned. You just maybe tell yourself it's okay, today is not your day, market not your side, it's not the end of the day, the end of your day, right? So learn from that, don't be regret. Maybe you just study, okay, and practice again, hit your stop loss, that is okay. Why? Because you know how to do risk management, right? You have the knowledge, you hit your stop loss, you just move on. Okay, and then maybe you take a break from your this trade setup and look for another trade setup, or you come back like tomorrow. Okay, maybe today is not your day, that's okay, tomorrow you just come back and trade again. Okay, and you can see that here a lot of people like FOMO here. Either you're FOMO here, okay, you're like fear of missing out. What does mean is that, for example, you have a FOMO already because, for example, because here, for example, okay, either price is falling, continue falling, maybe falling here, then people already buy, for example, people already sell at this, let's say breakout, okay, maybe this is they might identify the first support, okay, and then a lot of people will sell at this level already, and then maybe your friend, okay, one of your friends say, oh, I have a sale, I already sell, and then you FOMO, you feel amazing, you scared that, okay, you want to short, but you just FOMO, so you just entering sell entry without any plan. Then maybe you just put your sell entry here because you're scared. Okay, you're scared that you miss out the entry, because a lot of people sell. Your friend says they sell here because price break the support level, then they put the either buy stop here, but you have nothing. Then you enter around here, for example. Okay, price falling, price falling. This kind of price falling, you are really happy, right? Price falling, you're really happy. Either you put your stop loss really tight here. Okay, for example, okay, like you just want to put like a few pip, let's just say you put 10 pip above, for example, just this week. Okay, price coming down, you're so happy because you follow sale, because you FOMO, you follow sale. Up to here, you did not close because you say that, okay, I want to target here my TP, this is going to be my take profit, right? And then you short here, then you can see that price is reward is might either hit your break even or hit your stop loss, and then you feel sad, right? Because but your friend is still here. Okay, they're entering here because you're FOMO. You're scared that you did not catch the train. Okay, and then you can see that it might hit your stop loss, and then eventually it's falling. Okay, you can say it hit your TP, right? So don't be FOMO. If your friend say they are short from, like very high up here, it's okay. Either if you know how to trade, one price break below, either you wait for price to pull back here and then you short. Need to be patient, don't be FOMO. And let's say price come here, okay, even though like you put a sell entry here, for example, you put a sell entry right here, yeah, and then you put your take profit. Okay, you put your trade profit, sorry, you put your stop loss at the resistance level, for example, okay, and price is falling, okay, price falling here, and then price is reversed here, okay. Some of you guys have a FOMO, like, oh, I scared price will, hit my stop loss or not. Then you might cut loss. Okay, you might cut loss, and then eventually you see that price is reverse and hit your TP. So either trust your own trade setup, then we FOMO, because if they hit your stop loss, let it hit. Okay, if not, then hold your position. Or price falling. Okay, either you shift your stop loss to break even here. Even though price is reversed, it just hit your stop loss, but over here you will earning something. Okay, just protect your capital. Okay, don't FOMO like here. Okay, buying or selling without any proper setup. Okay. Okay, let me pause here. Any question? Continue. What about the next one? Because there is a lot of theory. Okay, I don't want to like read all out loud. That would be very boring here. Okay, maybe market cycle. Okay, for the market cycle here, okay, you need to know what is market cycle. Okay, basically you need to know if you know how to trade the strategy is called what is called white cop. Okay, white cop is a good if you want to learn those like market cycle. But if you don't know, right, easy to see, look at the chart. You just look at market cycle. What we can what we can learn, or what we can know, is that price cannot always go up straight up like that, or cannot always like straight down like that, right? The market cycle definitely from the support level, from the support level. For example, if you buy from here, like if you are a buyer, you buy, you buy at a cheaper price. Okay, definitely you want to sell at the higher price, right? You want to sell at the when the price getting expensive. Okay, you buy from here, you hold. Okay, you buy here, and then where you're going to sell. For example, if you want to sell at the resistance level, or you sell when the price getting expensive, or you sell by either you are using Fibonacci, this discounted zone, for example, right? For example, you buy here, and over here you just mark out, either you put it your resistance level, right? You hold, you buy here, okay, and then you know that price on uptrend, okay, you buy up to here, maybe either up to here you close your position because you're happy with the profit already. And then even though you buy cheap one, right, and then from here you want to short from this level, or you want to sell, because a lot of people say, okay, gold already expensive, which is 24 30, right? Expensive already. And you can see the price start to fall. A lot of the investor, they buy from the below here, it's starting to make the money, so they sell. I want to sell, I want to make the money. So you can see that it's a market cycle, right? Always here, price go up, always go up. Okay, this could be like a accumulation, yeah, distribution, right? Either sideways. Button here, after that you will fall. Maybe from here, accumulation first. Either they continue to sell or they continue to buy up. If you know how to trade white cop, it just look like that. Okay. Here could be from here could be like sideways, go up, sideways, continue to go up, or here price already go up sideways and then falling here. For example, we look at the chart. For example, gold. You look at market cycle here. Okay, here. Okay. Oh, I will just go ahead for. Okay. You will see that here. Up to here, you know that, okay, big boy in the market, right? From here, right? You can see that buy, 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 buy. You can see that a lot of buying pressure over here. And after that, okay, up to like really small candle. This is just, I just say the sideways. You may just consider a sideways here, right? You can see that sideways up to this week. Up to this week, okay? Up to this week. And you can see that up here. And okay, if you're a buyer, you buy from here. After that, you exit the market, you hold. Okay, you haven't sell. You just want to get a lot of the retail trader to like, you know, be in the market here, buy, sell here. After that, you can see that you make enough money already, price expensive, and then you're starting to get a profit, and then you sell. Okay. These are distribution already. Okay, you start to sell up your maybe your order here, or you can see that, yeah, right? So this is like price go up certain level, they will resting or sideways and then continue to fall. And for gold here, to me, I just think that they are still sideways in head four. Okay, you can see that it's sideways in head four. And this week we do have a major news, which is we have unemployment claim and non-farm payroll this week. So either from here, price will continue to go up or price will continue to go down. It's up to the news. Like here, right? That is just sideways. And then from here, continue or falling, we will see. Okay, here's the market cycle. Go up, sideways here, falling, then continue to go up and sideways and then falling, and now it's sideways. Okay. Or if you doesn't know how to look like at the candlestick, you can change to the light chart. Maybe easy for you to see. From here, in head 4, okay, you know that this is a sideways, like here. Here sideways, right? Meaning market cycle here go up, right? Sideways, and they decided to go up sideways and then continue to uptrend because price is not go all the way up straight like that, right? They'll be resting, like you running, for example, good example, you're running, you're tired, you take a break, okay, and then you want to catch those like really small fish here, okay, and then continue uptrend. After that, you sideways again, falling, sideways, continue, and then falling, and then sideways, okay? Okay, you know, don't know to look, change to the light chart, or you just go back to the candles, okay? All right, any question, guys? Okay. Okay, there is a question. What time frame are you normally use when trading? Okay, I use head 4 because I'm a day trade. I consider myself a day trade. I used to be a scalper, which is last time I scalp gold, okay, in M5, okay, but I look at H1. But now I change to like a day trade because scalping is may not suitable anymore and very, very tired because I look at the computer at least like 8 hours a day when I scalp gold. I in and out really often per day. So now I change my style. I look at H4. So basically every morning, like what I do, I look at the news first, like any major news that I need to take notes of. And I go to H4. I look at daily first, for example, gold. Okay, I know that gold is come from the key resistance level, price is falling. And now there is a sideways. And you want to look like yesterday or like 2 days ago, you will get the entry here because here is your support level. Okay, I will mark out. Okay, I look at daily because I want to know where is the high, where is the low, where is the support and resistance in daily time frame. Okay, once I know, okay, I switch to H4 because I look at H4 and then I find the key level. Okay, for the key level for gold in H4, this one is gonna be my first support, which is when price come here, I will get short from this level. Why? Okay, I did not trade based on any key level. You identify the key level first. Okay, I ship this one is my second resistance. Before that, okay, this is my first resistance. Okay, this is my support, and my second support is gonna be maybe slightly here. It may not good, but I want to leave it here first. Okay, from here, okay, when price create the high and the low here, okay, I'm talking when price come here, okay, here I see very clearly that price create a swing low and a swing high. Okay, I remark out my key level. I use Fibonacci for my swing low to swing high because in this case I want to find the resistance. I want to see where is my second resistance and first resistance in line up with any Fibonacci level, and I see that okay, this is the level that I want to take note of, which is they have like supply zone here. This is my resistance level. I have 23.6% here. So when price come to support level and bounce up here, I will short from this level, and then you can see that I stop here. Okay, price here. Okay, price come here. I go to M15 to execute my trade. Okay, I go to M15. I want to see like one price come to my zone, come to my resistance zone. I want to see if there is any confirmation, price action, or any form of like divergence here, even in M5. Okay, and then in M5, I see that price come to my resistance zone in H4. I go to M5, I see there is divergence here versus my eyesight here. So I know that, okay, I'm going to short at this candle. And if I to trade here, I even like implement or use ICT or SMC. Why? Because price break my low here. Okay, price break below my low here in M5, which is my either chain of character or MSS, right? Okay, they create a high, they create a low here. You use Fibonacci. For the ICT, optimal trade entry OTE is at between 78.6 to 61.8. Then you will get OTE, which is not, it is here in M5, which is you will get entry here in M5 and then you hold. Because why? Price on uptrend, okay? Price on uptrend very clearly. In order for them to break, they need to change the character. You need to break below the swing low here. In this case, right, I remove it very clearly that, okay, from here, low, high, they break the low. They get a new lower high, lower low, lower high, right? So now you know that they're not on uptrend because in order for them to uptrend, they need to continue to go like that. Higher high, higher low, and so on, right? In order here, in M5, I will get the entry where at this, here, which is 2356. Okay, and then you go to H4, and then you can see that I somewhere entry almost at the wick of this candle, but I want to go to the lower time frame. Like I say, I want to see what is price doing in a smaller time frame, and then you will see that okay, they're changing from uptrend to downtrend. Or this one, if you trade either QM or head and shoulder, you know that this is your left shoulder, your head, and this is your right shoulder. Okay, either strategy end up in the same like pattern. And then you can see the price is changing from uptrend to downtrend. All right. Okay, guys, thank you so much for your time. I read all around 2 minutes. Okay. Hopefully you guys learning something. All right. I will see you guys again in the next webinar. Okay. Happy trading. Okay. Have a good day. Bye, guys.